took her off.
Right.
Mr. Nash James came in and signed Wednesday.
Now, she's the lady that was over in
That's her
Finland.
husband. No.
No.
She works and whatnot. So I sent her a remote signature package Wednesday. Checked it a couple times over the weekend, resent notifications. She still hasn't signed. Until she
Is
signs.
this the older couple or the
That's the couple that rejected back because their oldest daughter went and did her tax return and didn't put on it that she was being claimed as a dependent.
Let's roll, dude. I want to go home.
Well, you should be fine because this chapter is not horribly long. So I'm trying to stall though because Sergio, although he's not the most important.
Not coming.
Oh, that's right. Yeah, he wasn't coming, but
And then this girl,
She's-
she does therapy, I know.
she
So
did therapy today. All right.
I don't know if she did it today, but that's why she was walked in late.
All right.
She goes, well, I didn't know if it'd be okay to just come in late. I
Yeah,
said, well,
that's
better
fine.
than not at all.
Yeah.
You can watch it on YouTube.
You want Google Chrome as the default browser on these, don't you?
Yes.
Actually, kind of no.
Are they going off of Chrome?
No.
Because this is asking to.
I know what it's asking to, and the reason why I have it set as default to Firefox is that way if you click through on something that's not Liberty related, it's going to open in Firefox.
Because it's asking. I thought, well, I could run it while I'm sitting here.
No, I don't want it. I mean, I understand why. I mean, I have my reasons.
Right.
I'd
Yeah.
rather have default Windows open into Firefox. That way it's not screwing up all the tabs that I've got auto loading.
Automatically loading.
Yeah. Yeah, we have, ours does that. We have it set up that way too. It's all our shortcut.
General announcement first. I was reading. For those of you that don't get the email from the IRS for tax preparers, you can go sign up for it if you like. There was an announcement buried in it. As of tomorrow, the IRS will no longer be offering paper checks.
Oh, wow.
Deep blue. They have
So
to
it's
do-
going to be direct deposit, period.
Yep. And if they don't
That's
have a
gonna
bank
make a
account, they're
couple of
screwed.
people mad.
Savages,
I mean-
welcome to you.
There's always printing out the check here, but you know what that entails.
Yeah, it's $40.
How
Or
much is ours?
open like Deep Blue. Same charge. I think
Can
it's
you
only
set up
20.
a deep blue card without having a financial product?
Yeah, actually yes.
Yes.
Oh, you can?
Yeah, you can go. You can go
I've never done one
when you
without.
when you have a client on there.
Yeah.
Once you're done, if you go back and you put in their number and you click on it, there's a tab on there. You know where you get your tax returns. There's a
Right.
tab on there that says Deep Blue.
Yeah,
If you
yeah.
click on that and click that, then you can open them up a Deep Blue account.
Okay.
Oh, at the top where we
Yeah.
created.
Like right here.
Yeah.
Yeah.
Deep blue.
Yeah, right there where that Deep Blue.
Aw.
If you click on that tab, it'll let you
Well,
activate
I've
a Deep
used
Blue
that
card.
tab to reissue a card,
But you
I
might
have
want to
to.
do that in advance. That way you have your direct deposit
but
information,
so
for,
you can use the bank account information as
Right.
deposit.
Right.
because you'll need that routing information.
Mm-hmm.
So we're basically gonna have to work kind of backwards.
A little bit.
Well, just do the entire return, and then before you send it,
Yeah,
open
you
up,
can do
open
the, you
up
can go
the,
back and do the tab.
open
Yeah.
up the Deep Blue card, and then go back in, reopen it back up, and set your.
Or just don't go to wrap up until you know for sure.
Yeah. Yeah, I mean, once you get
We'll
everything
just have to
in,
work on
Work on
what's
it.
best.
Yeah.
But like I said, that was kind of a surprise I didn't see coming, but that was in last Thursday's email.
Have we heard any more about possible shutdown?
Still the same.
Yes.
they're waiting on Democrats.
Yeah.
Mr. Negotiator won't negotiate.
It's freaking insane.
All right. Let's do this chapter. Might get done faster. There's only one chapter. We're down to covering just one chapter for a while. So I'll give you back your time that you lost. And today we're going to talk about interest, dividends, and capital gains. So, taxable interest, savings bonds, tax exempt interest, and dividends, ordinary and qualified dividends. We'll talk a little bit about 1099B and capital gain transactions. And I believe that we'll come back to that one at a future chapter also. Schedule D and 8949 and cryptocurrency reporting. And there's something new on that little front. What was that number again? 1099?
It is a 1099 DA for digital asset.
Yeah, that's right. 1099 dumbass. Oh, wait. If you're getting one,
So for this year, for tax year 2025, if we have any clients that have traded cryptocurrency, they should be coming in with a 1099 DA. Whereas before they would just come in and go, well, you know, I bought and sold, this is what I got from Robinhood.
Yep.
And we had to go through and figure it out. Now Robinhood should be issuing 1099 DAs.
And let's hope that it works out okay.
Yeah.
Let's face it, this is still uncharted waters. They're not quite sure what to really do with this. I mean, they're kind of treating it still like stock.
Capital asset.
Yeah, capital asset. But at the end of the day, you're selling something that doesn't exist, that is not backed by anything.
Except a bunch of computer numbers.
Except that's why the dumbass.
Well, that's what it is.
All right, so
Space.
determining the reporting of interest and dividends. No one distinguish between taxable and tax-exempt interest and dividends. Identify the reporting of stock sales and capital gains. And then a little bit more about backup and voluntary withholding because, well, in this department, there's no mandatory withholdings. And if you're going to make a lot of money, you might want to consider making a quarterly payment.
Yeah, because good luck getting your brokerage firm to take taxes out of it.
Oh yeah, especially on stock sales. They're really not down.
Nope.
I've seen it once or twice. And it was for big money. But otherwise, no, I ain't touching that. Alright, this chapter aims to enhance your knowledge of taxable income by introducing you to the various types of income that must be declared on the tax return. Well, hell, we've already started that. We're going to continue with that. This is not just a chapter-specific thing. Investment income such as interest, dividends, and the sale of investment property will be covered somewhat. We'll cover it some more. Many of the income sources covered in this chapter will require additional calculations and research to understand the effect on your tax return, and that is the truest statement I will tell you. And I'll give you an example later. So as far as the 1040 is concerned, this is what we're focusing on today. Lines 2 and 3, and you notice that there's two columns for that. At 2A and 2B and 3A and 3B, where the A's are tax exempt or tax favorable for 3A. And we'll get into that. Tax exempt on 2A is just that. You got money, you're not going to pay tax on it, at least on the federal side. Sometimes on the state side, you still have to pay tax on it. Case in point, I can invest in the Kansas Turnpike Authority. I can buy some bonds and they will pay me interest. If I live in Kansas, Kansas is happy about that. Thank you for investing. If I do the same for the Oklahoma Turnpike Authority, Kansas is not so keen on giving me that credit. Well, you should have invested in Kansas. No, we're going to tax that tax exempt income. Thank you.
Well, just like 2020 when $10,200 of unemployment was not taxable at the federal level.
Yes.
When Liberty went in and made their adjustments in our software, it took it out at the federal level. Well, Kansas uses the federal adjusted gross income as their basis to start. and nobody told the system to add that 10,200 back in on the Kansas side. So we spent 3 or 4 months explaining to clients why they got letters from the state of Kansas saying they owed several $100s in taxes because Kansas never agreed to exempt $10,200 of their unemployment insurance benefit income.
Mm-hmm. And Kansas wasn't the only state, so let's not completely throw them
Right,
under the
right.
bus. But yeah, we live in Kansas. We like to use that example.
And it'll be the same way with no tax on tips and no tax on overtime.
Yes, this is true. That's only at the federal side. Nobody said in the state of Kansas, or majority other states, that we're not going to tax that.
Right.
It's a good point. I actually never thought about that until you brought it up. I mean, eventually I would have thought about it, but
I've
I didn't think about it.
all last week. I probably had 12 phone calls asking specifically about the no tax on tips, no tax on overtime. What do they need to do? Is that going to mean I get more money back? And I've been cautioning people. Yes, on the federal side, you may see an increase in your refund or a decrease in the amount that you owe. On the state side, there is no provision for no tax on tips or overtime.
Yes.
They're like, what? I'm like, it's only at the federal level, not the state. So your state is probably going to stay about the same what you're kind of used to.
Mm-hmm.
You'll either owe a little or you'll get a little. That's just the way that's going to work.
Yeah. All right. So interest and dividends are common types of income, ish. Not so much. Not so much in this office. I mean, yes, I do get them, but it's not horribly common, and it's definitely not something what you call an early season client. Somebody coming in January, early February probably doesn't have this. These are what you call a late season client. They come in after the halfway point in March. No matter what, all of this money here is considered unearned income because it's the money, not a person that's actually doing the labor. Most types of interest and dividends are taxable, though. You have to specifically go looking for interest-free income. Like I said, I mean, you'll find that a lot from government entities.
Mm-hmm.
Told you that 1099 was an alphabet soup, and here is yet another example of it, 1099 INT. Thankfully, for most of 1099s, the letters that go with it tell you what it actually is. So INT tells me I'm talking about interest income. And generally, if you receive interest in the amount of $10 or more, dividends all included, you will get this form. Just because I didn't get it means I didn't get more than $10, but doesn't excuse me from reporting it.
Although 98.7% of our clients that don't get these, that have $3 of interest, don't report it.
Yeah, no, nobody's really going looking. I mean, even I really don't go look. I'll just plug in that sounds about
plug
right
in
number.
just to satisfy.
Yeah, I'll plug in that sounds about right number.
Yeah.
Because I didn't get a 1099, so it's going to be below 10.
If you needed, like in Shane's office where they do a homestead return, they actually generate a Liberty tax return. In order to give somebody their credit for the homestead, they have to show some kind of income. So Shane usually puts in $5 of interest.
Yep.
Because no 1099 was generated, so the IRS isn't going to scream and yell about it. And B, it's never enough that the client ends up owing taxes on it.
Right.
But it allows Shane to get to the state.
It allows us to file the form electronically. Otherwise,
Yeah.
without it, I have to paper file it. One of these
No.
days, I hope that Liberty will fix that.
You
I know, there's a way around it, but
could just go to the direct site
yeah, you
and
could.
do it for free, like we do.
Sucks that my numbers go down.
The only thing that changes is your return count.
Exactly.
What the other thing that'll change that'll be positive for your
Is your
office
discount.
is your discounts will go
Way down.
way down.
I know, it's a dual-edged sword. But we do so many of them.
I understand,
It's 6.
but I mean,
I do that at all. Sometimes in a day.
Yeah.
I know. But if you, I mean, like for us, when we do it straight through the system, we print it out. We scan that in and list it, list it on our system. And I always keep on the receipt for that year.
Yeah.
I always keep their login and password information. So when they come in the next year, we just go straight in. We log everything in. We do everything there. And because I have a copy of what they filed last year, I know how much their refund was.
Mm-hmm.
And that and their social security number is all I need once I get back into the system to do that return for them.
I know, that makes sense.
I mean, once you the hardest part is getting it all set up the very first time.
Yeah, because it's like, I don't remember my password. It's like, oh, for Pete's sake.
That's why when we go in and we set it up, we write all that stuff down for them.
Yeah,
Don't
but
worry,
three
I have
quarters
it.
of them are elderly, and they're not gonna remember.
Well,
It's
I don't have a phone.
I'll be dead next year.
Right.
That's what they always think. I won't make it to next year. Screw it. And then here they are. All right. So taxable interest. It can be interest from bank accounts. One of the most common types. Loans made to others. You loan your uncle $200 and charge him interest. You actually have to report the interest that you collect from your uncle when you get it. Nobody does that, but you're supposed to. Most other sources, I can have interest. I could have a cash account at my brokerage house that's paying me interest. I could invest in the bond market. So I own bonds in, name your company, and they pay me some interest.
Oh, speaking of interest, this year we're supposed to be able to take off interest paid on car loans.
Yes. But I wasn't worried about that. I do have my stack of OBA things to talk about, but none of that was actually for about today.
Oh,
But you're right.
interest trigger. It triggered it in the back of my head because it was interest.
Yeah, but I'll trigger it again when we talk Schedule A.
Yeah, deductions.
Yes, because that's where it's going to end up at. So Sarah earned $49 in interest on money in her savings account at the bank. She must report the fact that she received $49. She's going to have a 1099 for it. But it's not relevant that she left the $49 in the bank. Well, and you'll get that argument sometimes. Well, I didn't take it out. That's not the point. The point is that it's available for you to spend without jumping through any hoops.
You'll find that a lot with dividends.
Yeah.
People that have money market accounts that have it set up for their dividends to automatically be reinvested. They'll
Buy
get a
more.
they'll get a 1099 DIV saying that they received $5,000 in dividends. And they'll come in and go, I don't know why I have this. I didn't receive a check from my broker. No, but you have it set up for the dividends that your broker would pay you to reinvest into your account, correct? Yeah. The IRS doesn't differentiate between you actually receiving the money and then giving it back to the broker to reinvest, or the broker taking what he should have paid you and reinvesting it. There's no distinction between those two.
Exactly. So some taxable interest, some sources of certificates of deposit. Go down to the bank, open a certificate of deposit, basically where you're saying, I'm going to make sure that I don't take this money out of your bank for this time period. It can be anything from 90 days to 6 to 5 years.
60 months, yeah.
Yeah, 60 months. And you'll get a higher rate of interest. The longer that you promise it stays in the bank, they will pay you a higher rate of interest. Deposits or share accounts for credit unions, mutual savings banks, cooperative banks, federal and domestic savings and loan associations. Got a little savings account, they're paying me a little bit of interest. It doesn't matter whether it's at Intrust or Ameritrust.
Yeah, but my credit union says I get dividends.
Yeah, that's the other problem. Credit unions like to say that they're paying you dividends. Makes you feel like part of the owners. I mean, that's the whole idea. When the credit unions were part, you're a member owner. And so instead of calling it interest, they call it a dividend. They lie. It's interest. It is not a dividend. Taxable interest, U.S. obligations such as Treasury notes, bills, and bonds, U.S. savings bonds, all that is taxable. Installment sale payments, not, if I'm selling something on time and charging interest along the way. Life insurance proceeds remaining with the insurance company, even though that I didn't receive it. Again, it's the same thing. It just stayed on deposit at the insurance place. Tax refunds. Hey, the IRS is nothing if they're not fair sometimes, and if it takes them a year or two to actually grant you your refund because they had some questions and they finally got the questions resolved and they decided, yes, you should have got that money. Even if it's a couple years later, the IRS will actually pay you some interest.
But you gotta pay tax
Of
on
course,
it.
they will send you a letter acknowledging that they paid you interest, and you damn sure better be guaranteed that they're going to be looking for it on your next tax return, whether it's $5 or not. They know they paid it to you. Gifts for opening accounts. You remember back in the day when you go down to the bank and you'd open an account and they'll give you a free football phone or free toaster. Okay, that's a long time ago. And then the last thing I heard was, okay, free checks. You have to treat that as interest. So in the case of the football phone, you have to find out what it goes for. What's a football phone go for nowadays? Actually, it's probably a collector's item. It might be actually valuable.
If it says Sports Illustrated on it, it's probably a collector's item.
It's probably a collector's item. It's probably worth a couple of bucks. Which is a different problem. If I go to sell the football phone, that's a different tax rate. That's a capital gain. We'll talk about that later. Interest on savings bonds is reported on 1099 INT Box 3. It's taxable to the federal return, but it's exempt from state and local taxes. Well, I guess that's something. H, E, E, and I all are bond series that have taxable interest. And the only way you can cash those in nowadays, you got to go down to the bank. You go to the bank, you turn in the bonds, say, here, cash them. And then they give you the money. And then later, they'll send you a 1099 INT saying of that money you walked out of the bank with, this much was actually interest. So if you go down and cash in a mess of savings bonds, you might consider a quarterly payment for that quarter.
Depending on how much it is.
Well, I said a mess.
Yeah.
I was using some down-home Southern. It doesn't work, does it? Northern guy can't pull that off, right?
Well,
HH bonds. These bonds are purchased at face value and the interest paid twice a year, so the interest is claimed in the year period. These have been discontinued in 2004, so I can't get any. So technically what they were saying is that if I bought an HH bond, interest is calculated twice a year. I'm actually kind of supposed to be reporting that interest. Nobody ever does. EEs and I's, if the taxpayer had any of these bonds, they will get a 1099 INT. Taxable interest is payable when the bonds are redeemed. Federal income tax does not apply until the year in which the bond matures or is redeemed, or after 30 years when the bond actually stops earning interest. I gotta go through my stack. I've got some very old. I mean, they're still valuable. It's not like they stopped being worth something. They're just
legal
not
tender.
doing anything.
Yeah, they're
Is
still
there
legal
Donnie and
tender.
Marie stocks in it?
Huh?
Donnie and Marie.
You know, that's something that's not covered very well in the course of this book is that a worthless stock.
Should be a write-off.
Well, it is, but still, it's not something that's covered very well.
Yeah, what happens if Grandma comes in and drops down a mess of 1943 era
Ma Bell.
war bonds?
Yeah.
Ma Bell. People don't even know
God.
how Ma
No,
Bell is.
Ma Bell, we can.
And AT&T is.
Don't go down that road.
Yeah,
Yeah,
Ma Bell and
because-
AT&T,
Put
we
a
can work
put a
with.
pin on that. I got a Verizon story for you
Yes.
Okay.
Uh-oh.
later.
But something
I
like
don't- it's not today.
something like a war bond, because during World War II, to
Yeah.
help with the war effort,
Yeah.
the United States issued war bonds. So if Grandma comes in and drops down a stack of war bonds issued in 1943, 1944, they're not necessarily worthless, but what do you do with them? Can you actually take them and cash them in?
That's a good question. The paper might be worth, the bond itself might be worth more than
As a collector's item
as a
than what you
collector's
did
item
out of
than
it.
if actually you cashed it. It was $20 back then. Sure is different from $20 right now.
Boy. Buy a hell of a lot more than a Big Mac.
All right, so use 8815 to exclude from income any interest in qualified U.S. Series EEs issued after 1989 and I's that are used to pay for higher education expenses, tuition, and fees.
Mhm.
There are some places where I can cash my bonds and not have to pay tax on them. And so this is the form I'm using to tell the IRS why I shouldn't pay tax on something that's taxable. In this case, I was going to pay for higher education expenses, whether it's for me or dependent on my return.
Yep.
Doesn't matter.
Cash in $10,000 of bond and go deposit it in your kid's account at the college. Here.
Cash in $10,000 in bonds and buy your first house. It's another example.
Yep.
Free that.
That's your problem.
Damn hot flashes. No, it's a new medication they've got me on.
To do this, the bonds must be issued in the taxpayer's name or in the name of themselves and their spouses co-owners. It doesn't matter. Though if you're married and only one of you is on it, I mean, my bonds are so old, that was before I was married. Yeah, I need to cash those in. They're not doing me.
Surprised.
They ain't doing me any good. Taxpayer must be at least 24 years old before the bond's issue date. 24 is an important number. Why is 24 an important number? For age. You don't count. You shouldn't count. You don't count.
Why are you looking at me?
You should know.
You should know.
It's not exactly.
I slept.
24.
24 is that age where you can no longer be claimed as a child.
Dependent.
As
Or
a
child.
As a child.
Sorry.
As a qualifying child.
As a qualifying child.
I
That's
can,
why 24 is an important number.
I can keep my son on my return all the way up through age 24 as long as he is going to school and I am supporting him. He can be a dependent and I can qualify for earned income credit if I meet the
Other
income level,
requirements.
the other requirements.
So that's why this is up here. It's to stop that. Okay? If proceeds are more than education expenses, I can include only the taxable or the interest that's or that part of the interest that's taxed from taxable. Of course, I'm going to count that first. And there's no rule that says I can't.
Mm-mm.
Because the face value of the bond is, that's some of the value you get. You've already paid that. That was after tax money. So there's a certain amount of basis. And I'm not going to talk about basis strongly.
That's another
That's a whole
whole
other chapter.
Man, I'll just sit back.
You're equating the basis lecture with the depreciation lecture. And those two don't necessarily go together. I mean, they do,
In
but
my head, they do.
Yeah.
they do. But basis is also in other places.
And I'll be missing that day too.
On that there, they said they had to be 24 for the issue date.
Must
Taxpayer
be at least 24.
24 years old before the bonds issued.
A friend of mine, she's dealing with this. Her father-in-law got 70 bonds for her son. When they adopted him, he was only 2 years old.
Right. The issue date is not the date in which you purchase the bond. The
Okay.
issue date is the date in which you go and turn the bond in.
All right. Okay, got you.
Otherwise, I'm in the same boat because a lot of bonds that are actually in my hands are stuff that my dad bought for me when I was still going to school.
Yeah. No, the issue date on the bond is the date that you go to turn that bond
Gotcha.
in,
Okay.
not the date that you purchased it.
When savings bonds are inherited, the taxpayer needs to know whether the decedent or the estate claimed any interest as income. That's important for that HH bond because you're supposed to pay interest twice a year on it. You need to know if that actually happened. Because if it did, then when I go to cash it in, I don't have to pay tax on that because it's already been paid. If it didn't, I'm going to have to pay tax on all of it. And if I can't prove that it did, I still have to pay tax on all of it.
So you better hope somebody has an 8616.
Yes.
Because that's where that information is stored.
On the decedent's 8616, you look at the last tax year that they filed, or because it still should be there.
Mm-hmm.
Whether or not they cashed any bonds that year, that's irrelevant. Once you start an 8616, you got to keep going with it until it's no longer relevant.
Yeah, you if you start the 8616 and you pay all of the interest on that bond until it's no longer generating any more interest, and 3 years after it quits generating interest, you decide your tax
forget.
prepare or whatever forgets to file that 8616, then as far as the IRS is concerned, that H bond that you've already paid all the interest on still has interest due.
Yep. You lost track of it, so they're not going to keep track of it for you. Screw you. Start over.
Yep.
Even if you didn't have a filing requirement that year,
File the 8616.
by itself.
You can do it as a standalone.
Tax treatment of interests that are in retirement accounts. Well, I'm not going to pay for it right now. Because they're in retirement accounts. They're in tax deferred accounts. Yeah, go ahead. Thanks.
So what are you gonna do with your tip?
I hadn't put it on my account.
For a Roth IRA, interest and earnings from a Roth grow tax-free are not included in taxable income when the withdrawals are qualified distributions. Typically after the account holder reaches 59 years and a half of age and has held the account for at least 5 years. The tax-free status applies to all contributions and earnings withdrawn during retirement. Roth IRA. Probably one of the best options out there. Trick is that all the money that went in is that you already paid tax on it. That way, all the money when it comes out, I don't have to pay tax on it. None of it. As long as I take it out within the rules. Rule number 1 is I'm 59 and a half years old. Rule number 2, the account's been open for at least 5 years. Traditional IRA is what most people have. Interest and earnings in the traditional IRA tax deferred. meaning they're not subject to tax in the year that they are earned. Instead, they're subject to taxes when I take them out.
Which is the reason why box 1, 3, and 5 look completely different from each other on your W-2.
Because I didn't pay tax on it as the money went into this tax deferred account, into this retirement account. But the thing is, when you read that, and especially since we're just talking about interest today, you think that they distinguish between the two, and they don't. Money taken out is money taken out. However it grew in the account is unimportant. My distribution is the distribution. It's a combination of collected interest and money that I put in over time. There's no distinction between the money that I put in and the interest amount that it grew. There's no distinction. So, for an example, Henry makes contributions to her traditional IRA. Okay.
Okay, so I didn't read that wrong.
It's a new world.
Hey, you never know. He might identify.
Throughout the year, he
It's
gets
a
statements.
shim, okay?
Shim, I like that, the shim.
Throughout the year, he gets a statement listing the interest that he earned. He received no IRA distributions in the current year because the interest is tax deferred. He does not report any of the interest income on his traditional IRA or on her current year's tax return. When they're playing fast and loose with the pronouns on that
Boy,
one.
I tell you, because they start with her, switch to he, and end with her.
It's a
Got
shim,
two
like
hands
she
in
said.
Yeah, I guess he just kind of flip flops.
Yeah, well, whatever's prudent at the time.
It depends on the time of the year.
They are gender fluid.
There you go. Okay. It's exactly like it says. I don't care how much interest my IRA earned this year. It's not relevant to my tax return unless I take the money out of the IRA. As long as I leave it in there, it grows tax-free until I take it out.
Yeah, that fly is annoying.
There's two of them in here, and they've been bothering me for a week. Yeah, that's good.
Certificates of deposit. If the taxpayer buys a certificate of deposit with a maturity of more than 1 year, they must include part of that interest as income each year. Which is basically exactly like it sounds. I mean, there's no pulling punches on that. Technically, I don't receive the interest until it matures. I can't spend it until it matures. But I actually have to report the income as it matures.
But will the bank send you a 1099 for that interest while it's maturing?
They should if it's over $10. They should. They should keep track of the interest that they've already reported, as that way on the final one where you actually receive your money, it shouldn't include all of the interest because it should have already been reported. So, but if you don't get the 1099, you still have to figure it out how much interest it should have made this year, and report that. And nobody ever will.
No, nobody ever will until they cash it in, get the full amount, and then the bank issues the 1099
Right.
showing the full amount of interest.
Now, if I decided to take money out of a certificate of deposit early, the portion of interest may be lost due to an early withdrawal penalty. This penalty goes on box 2 of a 1099 INT, and this gets reported on Schedule 1, line 18 of your tax return. It's kind of stupid. The 1099 INT from the bank will say that you received $20 in tax, or excuse me, $20 in interest on the certificate of deposit. But I took it out early. And so they will say, well, okay, then you got penalized $18 for an early withdrawal fee. So you report that you made $20, But you didn't because I took it out early and I only got 2. And so I subtract off the 18. And wouldn't it just be simpler just to say I got 2? But no. This is IRS world. I have to report the fact that I got income, and then I have to report the fact that why I'm not reporting all of it. Or why I shouldn't be taxed on all of it in this case.
Mm-hmm.
Because I reported I received it, and then I'm telling them that I didn't. As an adjustment to income.
There's a lot of that in the IRS world.
Tom has a CD that matures in January next year. Bank paid him $75 in interest this year. He has to report the $75 of interest income on this year's return. Life insurance proceeds. Life insurance proceeds paid to the taxpayer as a beneficiary of the insured person are usually not taxable unless the benefits are more than the account payable to them at the time of the insured person's death. The excess is included in gross income if they receive payments in installments. Part of each installment payment that represents excess interest is reported as interest income. Interest received on tax refunds from the IRS is
Taxable income.
taxable income. Interest received on tax refunds. Oh yeah, from the IRS and such.
Inside.
Yeah, that's that special letter because it took them so long. So I already talked about that. Let's go back to this one. I have a $10,000 life insurance policy. And I've had it a long time and I'm still paying the premiums. And by this time I've paid more than $10,000. So the insurance company keeps track of that overage. And some of it's going, I mean, I don't get all of that premium every time because obviously some of that's going to administrative fees and they're going to chew it up. But there's still some excess left over that's going into an account. So my life insurance policy, even though it says it's worth 10 grand, because of my overpayments throughout the years, is actually worth more. It could be worth 15. It's a $10,000 policy, and I'm going to die, and it's going to be worth 15.
$5,000 is taxable.
That $5,000, yeah, exactly. That $5,000 is going to be taxable, and it's going to be reported as interest income, and that's going to be basically up to the insurance company to report it. They will issue the 1099 INT. Because like it says, it's easy when I take it all out at the same time. Okay, well, I want it all. Give me the 15 grand, and I'll report the 5,000. And then I'll get a 1099 saying I got $5,000 of interest. I'm going to report that. What?
Actually, when it comes to stuff like this, the insurance company is more liable to issue a 1099-R.
Yes, this is true.
With code 4 in box 7 for death benefit.
Yeah.
And it'll say that the gross distribution is $15,000, and the taxable portion of that distribution is 5. For an insurance payout like that on a death benefit, usually that'll come from the insurance company as a 1099-R. Because they consider it at that point more of an annuity than interest.
Right. And it doesn't matter because it's taxed at the same rate.
Yeah. It's still taxable income. So
we just need to understand how, because you get that from the client, and instead of asking the insurance company, they're going to ask you.
Yeah. Why did I get this 1099-R from my insurance company? Well, did you have a family member that passed away? Did mom and dad, grandma and grandpa?
Yeah.
Spouse? Well, yeah, my spouse passed away. Okay. Did he have a life insurance policy? Yes. That's what this is. This is that life insurance policy.
Right.
Especially if the payee on there is Mutual of Omaha Life Insurance.
Yeah. The bigger the company, the more likely.
Yeah.
Interest on tax refunds. Any interest you receive from tax refunds, whether from the IRS or state authorities, is considerable taxable income and must be reported. I don't see that from the state of Kansas very often. Take them forever to issue a tax refund, then, oh, sorry, our bad, here's some interest. Maybe once or twice. Very rare.
I'll say, I don't think I've
ever
I've
seen
ever
it
seen
once.
an INT from the state of Kansas for interest.
Well, even the IRS doesn't officially issue an INT. They just say a letter. Here's your tax refund from 2025. It includes X dollars in interest that you must report as income.
Yeah, but I've actually gotten letters of INTs from the IRS.
Yeah. Well, I've rarely seen an INT
Oh, I
from the
know.
IRS. I've
Okay.
usually
Oh,
just
no.
seen the letter.
They look like letters, but if you read it, it's
It's
actually
a
an
1099
INT.
INT.
It's an
Yeah.
INT.
Yeah, well,
Yeah.
it's not structured like one.
No, it's not. Absolutely not.
Yeah. But I mean, because I've had clients come in and go,
What
I
is
got this in the mail from
Yeah.
the IRS, but I don't know what this is. And it's basically a little box like this that is a 1099 INT. It
Yeah.
actually says 1099 INT up
on
there.
it. You
You're
just,
right.
You
And
gotta
does.
read it.
And the
I
first
don't read it. God dang it! I know what it said. Oh,
You lazy bum.
yes.
first question out of my mouth when I see that is, did you get a little extra on your refund because it was late getting to you from
And
the
that's
federal
when they go,
government?
"I
And they
don't
go,
know."
well, yeah.
Or they go, I don't know.
You
Yeah.
gotta pay interest on that. Incentives for opening accounts. The fair market value of a gift or service received for opening an account into the saving institution is interest. Reported in the year that it's received. Like I said, you get that football phone. You have to report the value of a football phone as interest. Actually, the bank will probably tell you, but
Good. I got $300 when I opened up my Chase account because I made over $500 in direct deposits into my Chase account in 90 days.
yeah.
So basically, I just had my paycheck deposited into my Chase account, and at the end of the 90 days, because I had over $500, they put $300 in my savings account. And last year, I got a 1099 INT from Chase for $300.
Interest and dividends. Interest and or dividends may be reported, usually by a stockbroker or mutual fund, on a substitute 1099 INT or DIV. These don't look like the standard IRS forms. They look like a letter. And this is kind of the start of it. So in this case, the Bank of Chicago is issuing a substitute 1099.
Line item.
And then we come down here and we see that this is their substitute 1099 DIV. This is a substitute 1099 INT. Thankfully, the line numbers on the letter match the box numbers on the actual form if you were getting one. So it's really not that hard to deal with.
Nope.
It's just busier.
You'll put the numbers from there and the same box numbers on the system.
So in this case, I'd open up a 1099 DIV in the system. I'd put $425 in ordinary dividends, $215 in qualified, and $315 in the capital gains distributions boxes.
Yep.
Every other box on that 1099 DIV, I'm leaving blank. Same goes for the other part of this. I'd open up a 1099 INT, put in $439 in box one.
There isn't anything for box 7, is there, on the DIV?
No.
Okay, good.
No foreign taxes paid today.
Don't we have to put 0 on state so it knows?
You don't have to.
Yeah, you don't have to put anything in there. I mean, even if
You could even leave the state blank.
yeah, if it's not listed on there, you don't have to put anything in there.
Right. Some types of interest are tax exempt from federal income. The taxpayer is required to file a tax return. Any tax exempt interest received is for informational purposes only. That shows up on a 1099 INT in box 8, and it still gets reported on the 1040 line or box 2A. But then that's the last thing that ever happens to it. Yes, IRS, I received this money. Yes, IRS is tax free. Yes, you know about it. I know about it. Everybody knows about it. Thank you. Have a nice day.
Yep. I got
And
this
like I
money.
said,
Ha, ha, ha,
that's
you don't
even
get it.
only if I have to file a tax return. If I don't, I can get $30,000 of tax exempt interest. I don't have to file a tax return if that's my only income.
Just pray you're not getting Social Security at the same time.
Yeah. Now that's a different problem.
Yes.
As we said earlier, do not report interest from an IRA as tax exempt or even taxable. That's tax deferred. I'm not worried about it right now. Bond issued from the following entities generally pay tax exempt interest to state and political subdivisions. That's the counties or the cities, not the Republicans and Democrats. the District of Columbia, and U.S. possessions and political subdivisions, territories, such like that. Examples of tax-exempt bonds include issued by port authorities, toll road commissions, utility service authorities, community redevelopment agencies, qualified volunteer fire departments. And while it's not taxable on the federal tax return, it may be taxable on your state. Like I said, states are pretty keen on, okay, thank you for investing inside the state, and not so hot on the fact that you invested outside of the state. It's just like the old moving exemption. They were more than willing to give you the moving credit when you moved into the state. They were not so keen on giving it to you when you left the state. And one guy found out the hard way. He moved to Indiana. The state of Kansas didn't like the fact that he wrote off on Kansas taxes that he used the moving exemption to go to Indiana. And they taxed him on it.
You no longer qualify. Kansas residents only.
Now, if he moved from Indiana to Kansas, then Kansas would have been fine, but I'm sure Indiana would have thrown a fit.
Since he probably wasn't filing an Indiana return for that year.
God, I think he moved in the middle of the year, so it was 50-50.
Oh, okay.
Dividends or distributions of a money, stock, or other property paid to you by the corporation as a shareholder of the corporation. It's your reward, basically, for having some faith in the company by buying their shares. I buy shares in Walmart. 4 times a year they say, thank you for investing in Walmart. Here's a kickback of a portion of our profits. I mean, that's the idea. Now, the company could be losing money and still issue dividends. So just to say it's a portion of profits is not really a true statement, but it's the easiest way to put your head around it if you don't know what a dividend is. It's your share of the revenue.
That the company will use to create a hole for itself so it doesn't have to pay tax.
Right. I mean, that's the whole idea. If I paid it to you, that's an expense. My taxable income, Walmart's taxable income just went down because I paid dividends.
Yep. Why it infuriates me when everybody says corporations don't pay their fair share of taxes. They do, they just
Defer
They
to
do it-
somebody
they
else.
defer
do
it
in
to
a different
everybody
way.
else.
Yeah.
I mean, think about it. Microsoft. You think Microsoft really doesn't pay corporate taxes? They do, but the lion's share goes to that 10,000 shareholders that hold Microsoft stock. That's where Microsoft's taxes are paid.
Just by Joe Blow.
Right.
Ordinary dividends show up on a 1099 DIV in Box A and should be placed on 1040 line 3B. Ordinary dividends. There's nothing special about them. You treat them as regular income. Regular unearned income. So here's our 1099 DIV, again talking about dividends. So our letters for our 1099 actually match up. It's understandable. And for most of 1099 series, it's true. I know what's caused it by just looking at the letters. 1099G, I know it came from the government. I don't know why it came from the government yet, because there's a lot of different possibilities, but I just know it came from the government.
State government. 1099G, you won't typically get a G from federal government.
You will,
For what?
if you're a farmer participating in a set-aside program.
Okay. That's right.
Yes, he's right. Most 1099Gs are going to come from the state or local level, but
Well, Mr. Hess gets one of those, but it's a 1099G from the state of Colorado. Because
then the federal government's not paying for
the
it.
federal government subsidizes the program in Colorado that pays Mr. Hess not to farm his land. So, because the program that pays Mr. Hess gets funded from the federal government, Colorado's the one that sends out the 1099-G for that.
Okay. Well, that's the way Colorado's doing it.
I don't,
I've seen it officially from them. So,
because I
from
actually,
USDA. Where's
because last year,
don't you get it to set aside, or didn't you?
What?
get a set aside for your farmland?
I don't have farmland.
Didn't you back in the day? No. Okay, I thought you did.
Because I actually, in order to be able to put it on his return this
Yeah.
last year for 24, I actually had to open up a Schedule F
Yeah.
to put it on there because it
That's-
wouldn't let me just list it any. I had
That's
to put it
another
on the
income.
Schedule F.
Yeah. It's too bad you had to feed it to an F for no good reason.
Yeah.
Is somebody else farming it for him?
No,
Or is,
no, the land is just sitting vacant. It's just sitting there. He pays the utility bills for the electrical power and whatnot that goes to the land,
Right.
but Colorado Department of Agriculture is renting, because that's how it's listed on there, as an agricultural rental or
yeah.
agricultural lease.
Yeah.
They're paying him not to do anything with that land and just
Right.
let it sit.
Right. Yeah, we
So-
had a portion of that in Morton County.
Yeah.
It was a conservation land.
Oh,
Wetland. Wetland.
right.
And we got a 1099 Patriot form.
Yeah,
off of
PATR.
that.
PATR.
That's what he got was a
Yeah.
PATR.
Yes.
Yeah, they're moving that way, but I've seen it on TV.
Yes.
Oh, okay.
With but it said it like down on one of the other boxes.
The problem with my farmland was we didn't farm it.
Yeah.
Somebody else did.
Your property.
No,
Leased
it
it.
was a cousin. And he took 33% of the crop as payment
Uh-huh.
and would not report it to us of how much he made so we could write off that portion. Oh yeah, he
wow.
he fucked us over big
Yeah.
time.
Hey. You can say that in the evening class when I'm not recording it.
You're recording? Oops!
I didn't realize you had a good one.
I told you I do the morning classes.
Sorry.
He messed us over big time.
I got the box clicked. It's not for children, but I don't have the explicit words box clicked. So.
That was the one free blooper.
Most common types of dividends are ordinary dividends in box 1A. That's the most common type. Yes, that's true. There are other things called qualified dividends, and we'll get to it in a minute. This is a box 1B. Qualified or capital gains distributions show up in 2A. Non-dividend distributions show up in box 3. And other distributions received from a corporation or a mutual fund can show up in different ways. Ordinary taxable dividends are the most common type of a distribution from a corporation. They're not capital gains, it's regular income. They are paid out of the earnings and profits of a corporation and are considered ordinary income. Ordinary dividends are on box 1A, return 99 DIV. Just like I said, 4 times a year, or however often, but 4 times a year, Walmart sends you a check. They issued a dividend of $10 a share, and I own 50 shares. They sent me $500 this quarter. Report the ordinary dividends on line 1040, line 3B. If the dividend income is more than $1,500, Schedule B must be completed. Let's see, if I get $500 and they do that 4 times a quarter,
2000.
I need Schedule B. All it's going to say in this one, because I'm keeping it simple, is that Walmart paid me $2,000.
Yep.
The whole idea is Schedule B is an itemized report of saying, because it's assuming that, well, you know, if I'm getting a lot of money in dividends, I'm getting it from a lot of different sources. It's helping the IRS keep track of who paid me dividends. Very rarely was it going to be from just one place.
Allows the IRS to go back and make sure that whoever's reporting it to you is not cheating.
Right. And vice versa.
Mm-hmm.
You're not under-reporting that you received something.
Which with 1099 forms is hard to do because the IRS has a copy.
Normally say don't get married to numbers, but do get married to this number. More than 1,500. So at 1501, you need Schedule B. One thing that wasn't mentioned is from an earlier thing is that if I received more than $1,500 in interest, I have to have a Schedule B. I don't know why they waited till dividends. They could have talked about it earlier and then re-mentioned it. If dividends are not received because they're being reinvested, the dividends still must be reported as income. Matt already covered that for you.
Yep.
I don't care that you never actually got a check. You never got the money. You got more dividends. Well, most dividends are issued in a cash. And then, like he said, you told the brokers, okay, every time I get a dividend, I want you to buy more Walmart. Just convert it into more shares immediately.
Mm-hmm.
Well, you actually had control of that money because you told the broker what to do with it, so therefore you should be taxed anyway. You kind of did have it. Doesn't matter that immediately you spent it. You still got it, and then you got rid of it for more shares of Walmart.
And it doesn't matter that you didn't get a check in the mail and then walked down to your broker and turned it back in and said, buy more shares.
Yeah,
It's the same thing.
yeah, it'd be the same thing. There's just, this is nowadays. Things can happen in 30 seconds.
I spent 45 minutes explaining that fact to my dad 2 years ago.
And he probably still didn't really understand. He just said, yeah, whatever.
But I didn't get a check. Dad,
That's not relevant.
doesn't matter. You told your guy to reinvest it.
Qualified dividends are the ordinary dividends eligible to be taxed at long-term capital gains tax rates. Qualified dividends are reported on a 1099 DIV and line 1B should be placed on line 3A of your 1040. Qualified dividends are not in addition to the ordinary dividends reported in box 1A. Rather, they represent the portion of ordinary dividends on which will be limited to your capital gain tax rate, which is very beneficial because for most people that come to our offices, the capital gains tax rate will be 0. You actually have to make a good amount of money from other sources before your capital gains get taxed.
For singles, as long as you're under like 49,
Yeah, 50,000 basically.
like basically 50, like 49.9, your capital gains tax rate is 0. If you're married filing joint, it's almost
Double.
90,000.
Yeah, almost double it.
Mm-hmm.
And that's overall income. And as long as I keep it below those numbers, any capital gains income that I have will be taxed at 0.
Yep.
Some people ask, well, how do these people get around paying taxes? Well, this is kind of one way. If all my income is based on capital gains, and I keep it below the right numbers, I don't have to pay a dime in tax.
I mean, think about it. Could you live off of $50,000 a year? Okay, so if you went out and bought a house, spent a year fixing it up, living in the house, and 2 years later, you turned around and sold that house for a $200,000 increase, you just made $200,000, right? Okay. Do you owe any taxes on that $200,000?
Nope.
Nope, because the last house you sold was 3 years ago. You're selling this house 3 years after you sold your last house.
As long as it's your primary house for that period,
So as long as it was your primary home for that 3 years,
I can exempt it.
you can exempt that $200,000. Now you turn around and you take $100,000 of that $200,000, buy another house,
Fix it
live
up
in the
and
house,
there.
fix it up. 3 years later, sell it off. All of the income that you make off of that house is exempt.
Flipping a house.
Flipping's-
Although you're not flipping it because
Yeah.
that's a different activity. But
that's
it's
completely
the same
different.
concept,
Right.
except that instead of just not living in it and just fixing it, I'm actually living in it as I fix it. And that distinction must be made
Yes. This is my primary residence.
for the
I
next
bought it.
3 years.
I bought it for $100,000, and 3 years later, my house is worth $350,000. I paid $100 for it. It's now worth $350,000. I sell it for $350,000. I made $250,000. If I'm single, I'm good. If I'm married filing joint, I'm good. None of that money's taxable.
Right.
turn around, take $100,000, buy another house, live in it, fix it up for 3 years, live off of the $150,000 that I had left over.
And that's how you do it. And you're getting the income, you're not paying a dime in tax.
Yep.
Capital gains distributions reported on a 1099 DIV Box 2. Capital gains distributions occur when a mutual fund sells assets for more than their cost, and the realized capital gain is then distributed to its fund shareholders. Mutual funds is very simple. It's that you have a company whose job is to invest in other companies. And they look at it from different points of view as whether or not they think that the company is going to grow in value or the dividend amounts that they get paid out. With dividends being more the primary idea. But sooner or later, sometimes maybe that company, hey, this is no longer eligible to be listed on us because we're safe. We're a safe company. We're a safe mutual fund. We don't invest in questionable ones. And this company no longer meets our criteria. And so we're going to sell all our shares in that company. But it turns out that they sold all their shares in that company at a profit. And so the mutual fund company says, okay, we sold our shares at a profit. This is your share of that capital gains distribution.
This is your share of the profit.
This is your share of the profit.
And the mutual fund's going to say, well, we got $1.5 million in profit. We paid out $1.8 million in dividends to our shareholders for that profit. We don't owe any taxes on any of them.
Well, actually, it's not fair to call it a dividend because that's not what they did. They paid a capital gains distribution.
Right. Well,
Same idea.
Same idea.
Same effect at the end of the day.
Yeah.
They didn't pay tax. You're not going to pay tax, most likely. Because it's going to be taxed at capital gains tax rates.
Yep. It's a business expense for the mutual fund, and it's a zero tax liability for you because you don't have the income to have to worry about it.
Report capital gains distributions on line 13 of Schedule D. I don't need to worry about filing Schedule D for any other reason. I can report these distributions directly on line 7. If I just have capital gains distributions and capital gains income that is basically provable, the IRS has already got a copy of the form.
Yep.
I don't have to fill out Schedule D, is what it's saying. I got 1099 DIVs, all of them showing qualified dividends and or capital gains distributions. The IRS already knows about it. The IRS already understands why I'm filling out this line, box 7, line 7. They can prove it. Now, if I'm doing something, I sold my baseball cards, which is actually a capital gain.
And very taxable.
And very taxable. Then I would have to use Schedule D to report that sale.
Yeah. Sell your $1 million Mickey Mouse. 28% tax.
Talking about what Matt talked about earlier, I sold my house. It was my primary house. Even if I get a 1099-S for the sale of the home, I will still probably want to fill out Schedule D because that's the form I need to be able to exempt my income that he was talking about. Because, like we said, I sell a house. If it's my primary house, I lived there for 3 years, meeting some other rules, keeping it simple, I don't have to pay money on any capital gain I have on the sale of the house.
Right.
But I have to tell the IRS why.
You'll put down the basis, you'll put down what you made off of it, and then in box G, you'll tell them why you don't have to pay taxes on the capital gain from the sale of that house.
Right. There's a code, and that particular code says, hey, this is my primary house for 3 years, and I haven't sold the house in 3 years.
Yep.
A non-dividend distribution is a distribution paid out from earnings and profits of a corporation. Non-dividend distribution reduces the basis in your stock and is not taxed until your basis in stock is fully recovered. The non-taxable portion of, also called a return of capital, reported on 1099 DIV Box 3. Once your basis is reduced to 0, you report any additional return of capital as a capital gain. Think of a smaller company, because when we talk about stocks and bonds and stuff like that, everybody automatically starts thinking about Boeing, General Motors, Walmart, big companies.
I give Shane $5,000 to buy a truck for his lawn care business.
Yeah. And Matt's a partner. and I start paying him. Well, he doesn't have to be a partner, but it
Yeah,
works better.
wouldn't have to
that
be
way.
a partner, but yeah.
And I start paying him back. He's got $5,000 invested in my company right now, and every year I'm going to pay him back a quarter of it until we're square. And then I might pay him a little extra after that for interest.
Right. The first $5,000 that he pays me
It's tax free.
is a non-dividend stock, is a non-dividend distribution, because he's just paying me back for the capital asset I gave him.
Yep.
Now, once that $5,000 is done, and he sends me the next check for $1,000, saying, "Hey, great, thanks. I really appreciate the loan. The trucks really help. Here's a little extra for you."
Right.
That becomes a
tax.
capital gain distribution, and I have to pay taxes on that.
Right. If he's subject to capital gains taxes.
Right.
So a different way of saying that, James purchased stock in 2005 for $4,000. He received a return of capital of $500 in the stock in 2006. Therefore, James has reduced his basis in the stock to $3,500. At $4,000, they paid him back $500. Now he's down to $35. 2024 received a return of $4,500. Since he only had a basis of $3,500, his basis is reduced to zero. The remaining $1,000 of capital is considered long-term capital gain and will be taxable in the year that he received it. In this case, we're talking about 24 taxes. So even though he got a check for $4,500, he's only subject to tax on 1,000 of it, because the other of it is just a return of money he loaned, invested, whatever you want to call it, in the company.
Mm-hmm.
And the company bought him out. You no longer have an interest in this company. Oh, and by the way, here's an extra grand just for, just as a thank you. Or whatever you want to call it. It could be deferred interest. In such a way. It's not written like that, but that's kind of a way to understand why it got an extra grand.
Yep.
Does that make sense? I worry about this chapter sometimes because it's got a lot of concepts in it that's more business than it is tax.
Mm-hmm. Like this.
Stock splits and stock dividends. In general, neither stock splits or dividends are taxable to the shareholder or the recipient. There's a reason for that. Stock split occurs when a corporation divides existing shares of its stock into multiple new shares. Results decrease the market price of individual shares without causing a change in the company's total market capitalization. There are other penalties involved in that, but that's more on the financial side than it is a tax thing. For an example, and I hate the fact that they use a 3-for-1 split. I just wish they kept it simple.
2 for 1.
2 for 1.
Yeah.
For example, 3-for-1 stock split means for every share of stock held by a shareholder, now they have 3.
Doesn't necessarily increase the value.
I still own the same amount of dollars in the company, but now it's divided instead of on one piece of paper, it's now divided to 3 pieces of paper.
If each share was worth $30, they do a 3-for-1 split. Each share is worth $10.
I still own $30 of stock, just now it's on
3
different
shares.
sheets. And it's not income because nothing happened. I still only have $30.
No taxable event.
It's not a taxable event. But why would a company want to do that? Well, I mean, we're using simple numbers to put your head around it because, at $30, that's not a barrier to buying a stock. When your stock is pushing 1,000, 2,000, 3,000, a lot of people have a hard time buying stock. That's a lot of cash. How can I do that? How can I make more people eligible to buy my stock? Declare a stock split. Isn't that, like we said, 3-for-1 stock split. Instead of you needing $30 to buy a share of my stock, now you only need 10. And this is the reason why companies would do a stock split. Because they want to increase their market capitalization ability. Like I said, it's more of a finance question than it is a tax question. There's no tax implication for it. Jessica purchased 1,000 shares of XYZ for $120 back in 2010, so her tax basis is $120 per share. This year, XYZ announced a 4-for-1 stock split. As a result, Jessica now owns 4,000 shares of stocks. Her total basis is still $120, but now her basis is $30 a share.
What makes it easier for her to buy another 1,000 shares at
Yeah.
$30 a share as opposed to $120
Yeah, if
a
she's
share.
bullish on XYZ, now she can buy more.
Yep.
Sherry purchased 200 shares of ABC Corporation in 2012 for $8,000, so her per share basis is $40. This year, ABC has declared a 15% stock dividend, so every shareholder received an additional 15 shares for every 100 they held. Therefore, Sherry will receive an additional 30 shares. Her total tax basis remains at $8,000, but her per share basis now becomes $34.78. That one doesn't happen very often. Declaring a dividend of stock.
Yeah.
That's a rare thing. The more common thing is that we're going to declare a stock split. Interest and dividends received from entities like S corporations, partnership, or limited liability companies are reported to the recipient on K1. Scary looking form, not really that bad. Its bark is much worse than its bite. K1s.
Don't get hung up on the K3 box.
Thank you.
Yeah. That doesn't always apply.
You may get, you may have a client that comes in that has a K1, and you may see on that K1 that it says a K3 has been issued. That's not necessarily for your client. There are specific things that have to happen for your client to receive a K3. But
Wasn't he sure?
if your client is part of a group, people in that group may be required to have that K3. Just not your client, but it's still going to show that it's marked on the box that a K3 should be issued, because there are clients for that specific account that need the K3, and they're not going to go through and go, okay, well, this one does, this one does. They're going to go click, make a K3 for everybody, and then they're only going to send it to the people that need it.
As corporations, let's talk about that for a second, because like I said, it's easy to think about when I talk about corporations, you automatically think about General Motors, Ford, big guys. Those are C corporations. S corporations are much smaller. It could be just one guy. I had a guy that he ran an S corporation. He was a pilot. Contracted out to Honda Jet.
Is BMH?
Huh?
Is BMH?
It is an S corporation, yes.
I wasn't sure if he filed as an S corp or if he
It's an LLC.
or
or
just
something like that.
No,
as an
he's-
LLC, Schedule C LLC, because he's only owner as far as we know.
Him and his wife, so
Oh, so it's a
that's a
partnership.
It's a partnership, but I think
Still could be a-
I think he's still an S corporation because that's what he did with his UPS stores.
Okay. Yeah, and it's all under the same umbrella. So
So we have these S corporations. They're corporations. They still have the protection of the corporations. It's just that their capitalization is so much lower. And they're limited to the amount of shareholders there can be on S corporations. Like I said, the last S corporation I actually was working on, one shareholder, him, he owned all the shares. He still had to have company meetings. He still had to have a corporate meeting 4 times a year to file that paperwork with the state that he was incorporated in, Kansas. Hard meeting. Hi, is everybody here? Yes. Okay, thank you. You know?
Myself already.
Yeah. Stand in the mirror. Are you here? Yes. Okay, I'm here. So,
makes me think of.
On Schedule B, you must report all interest in Part 1 and all dividends in Part 2. Additionally, you may need to complete questions in Part 3 if you're reporting taxable interest on ordinary dividends of over $1,500. What we're talking about here is a Schedule B. Remember that if I said that you received a dividend or a stock of 15 or more than 1,500, although I use 1,500 in this one. And here's the thing about Schedule B: I can fill one out. It doesn't matter. If it was only for $500, I can still fill one out. IRS won't reject my return just because I included a Schedule B on it that I didn't really need to put on it. But maybe I had a good reason to. There was a lot of things. I had a guy, man, he got dividends from all over the freaking place. I don't think he even knew what he was actually investing in. I filled out a Schedule B just so I could keep track of it. And that was because that way I know that I got it. I reported it. So Part 1 is talking about our interest. So in this case, this guy received $15 in interest from BBT Bank. We don't have any dividends, but if we had dividends, they'd be reported here.
I have a question.
Yes.
It's completely different, but, so how much does that form cost right there?
I don't worry about that. And not all the
I'm
time.
just curious.
I'm not filling it out to pad anything.
Right.
So in my case where I just talked about it, if there was a charge for it, which not all forms actually have a charge for, we don't charge for any worksheets.
Okay.
But some of these reporting forms don't have a charge because they don't really do anything.
It's
So-
just more of like a record.
Yeah, it's just a record keeping form. I don't think there is a charge actually for Schedule B in our system. Because we charged on the inputting of the 1099.
Yeah, we charge them for the 1099.
We charged them for the
BIV or
1099. The B was a side effect of that. We probably don't charge for it.
Okay.
I don't think we charge for it.
I was just curious.
No, $1,500 on either one of these triggers the Schedule B, but say I got $750 from an interest and $750 from dividends, I don't have to do Schedule B. Even though I went over the amount for Schedule B, on theory, in concept, I went over $1,500, but since neither one of those were either all dividends or it just didn't trigger it. $750 on either one, even though combined they do, separate they don't, therefore I don't.
Yep.
And it talked about Part 3 on dividends. Looking at here, foreign accounts and trusts. If I am receiving income from overseas, if I'm receiving dividends from overseas, the IRS is going to want to know about it because I might not be getting a 1099 on it. I might be. I can invest through my brokerage house in companies overseas, and they would issue me a 1099. But I can also do it direct. So this is accounting for the IRS. It's like, okay, how did you get this money? Well, I was invested overseas.
And
Do I have a bank account overseas?
that can bleed into a whole bunch of other messy stuff.
Yeah. But here's the one that's really going for is, do I have a bank account overseas that is worth more than $10,000?
Schedule B is $40.
U.S.
You could have 10,000 lira in an Italian bank account,
I
Yeah.
have a return
It's
open,
10,000
I just
lira.
threw one in.
equal to $10,000 US.
No, it's about $1.
So if I have 10,000 lira in an Italian bank account, I don't have to report it. I could have $1 million, a million lira in an Italian bank account. If it doesn't equal more than $10,000 US, I don't have to report it.
Right. I'm telling the IRS I have a foreign bank account, and I'm telling them it's not worth all that much. It happens very often. My Canadian clients, for instance, I have to click box yes. because they're all their money is at Royal Canadian Bank, RCB.
RCB, yeah.
My Dubai guy, I don't, because all his money is deposited back here in the States at Mid-America Credit Union. Thank God for direct deposit. So, foreign account, I must answer yes. Question 7A, if I have signature for authority or financial interest over a foreign financial account. Like I said, bank account's the one that you automatically go to, but say if I had a brokerage account at TD Waterhouse in Canada, that's actually yes. 7B, if I'm required to file a FinCEN Form 114 for reporting foreign and bank and financial accounts, we call those FBARs. Don't confuse that with FUBAR. U.S. person with financial interest or signature authority over a financial account must file an FBAR if the aggregate of the foreign account exceeds $10,000 at any time during the calendar year. All I'm doing is tell the IRS is that they're eligible to file an FBAR. Kind of up to them to do it. I could do it, but they're doing it, so I don't worry about it. Backup withholding interest on dividends. Interest and dividend income are generally not subject to mandatory withholding. I'm going to put the mandatory in there. They're not subject to withholding. That's not necessarily true. They're not subject to mandatory withholdings. However, if the bank mutual fund does not have a correct Social Security number, and the payments are subject then to 24% mandatory backup withholding. I don't know how you start an account nowadays without a Social Security number, so I'm not necessarily worried about that particular sentence.
My question to that would be, however, if the bank, mutual fund, etc., does not have a correct Social Security number for the client, could a foreign resident with an ITIN open an account? That's what I'm wondering.
Yes, and that's where that's coming in because
because then they would be required to do the 24%
mandatory withholdings.
That way they don't get it and go back to their home country and not pay the United States anything.
Right. And that's basically what it is. I mean, that's what that paragraph is really just covering.
Right.
Because otherwise, you're not opening an account in the United States without a Social Security number. They don't want to talk to you. You barely walk into the bank without a Social Security number. They got an alarm at the door. Beep, beep, beep. No.
No Social Security number.
Get out.
Here, come with us in the back for $25.99. We will put in the W-7 to get you enough.
Yeah. Backup withholding will be shown on 1099 INT and dividend, their DIVs, in box 4. Nice thing about using 1099 series is that federal taxes withheld is usually in a box that's bolded. Your eye goes straight to it. And the eye is lazy. It goes to the darkest part of the form. In this case, it's the bolded box. Most of the time it says 0. Add the amount in box 4 to the withholdings as recorded in other forms. W-2, enter all that on 1040 line 25D. Well, the program does that for you. If you're doing a paper style, you can keep track of it.
Mm-hmm.
You can choose to have taxes withheld from other types of income, such as unemployment compensation. This is voluntary withholding. Now, I have never seen withholdings on 1099 INT. I have seen withholdings on 1099 DIVs.
Yep.
The guy is so invested.
Especially if box 3 has a big number in it.
Yeah.
Your capital gains. If he's got a lot of capital gains income coming in, it's...
He might have told the brokerage house to withhold 20%.
Yeah.
But this is voluntary. I had to tell the brokerage house, I had to tell the bank, please withhold X%.
Had to tell unemployment. Had to tell Social Security.
And they have numbers for you. Social Security is the most restrictive about percentages.
They give you a range.
They give you a range, but it's not as big as other places. Capital gains, when I sell an item held for investment, the gain or the loss is reported on Schedule D, line and 8949. Again, not so much, I mean, we're going to cover this again at a later chapter. I'm not going to get a lot of detail about this right now, but I'm selling a capital asset. Let's just define that real quick. Something that I can touch, basically.
Mhm.
Basically. I can go farther, but a capital asset, something I can touch, business related for the most part. This table is a capital asset. That chair is a capital asset.
Computer.
The computer is a capital asset. This TV is a capital asset. The coffee in this cup is not a capital asset, even though the company bought it. The reason why it's not a capital asset, because it's expected to last less than 1 year.
Might get a little fuzzy if it didn't.
I wouldn't want to drink it if it did last past 1 year. But that's the definition, basically, of a capital asset. Something basically tangible, for the most part. I'm making broad generalizations right now. And it's expected to last 1 year or more. Well, if I sell it, then I have to report the transaction. And hopefully I sold it for more than what I paid for it. This is also where I could insert depreciation, but I don't want to bore the hell out of you right now. We'll come back to that.
This is also the form where you would report the sale of your home.
Yes. Matt mentioned this form. It's like I sold my house. I'm putting it down here. Long term. This form is divided into two different terms. Short term, long term. Short term, I've held it for 365 days or less, and that number is important.
Yes.
Long term, I've held it 366 days or more. That one day being everything. And by the way, day one doesn't count.
If you bought it January 1st and you sold it January 1st of the next year, it's short term. But if you bought it January 1st and you sold it January 2nd of the next year,
It's long term.
now it's long term.
Except in a leap year, then I made up for it.
Right.
And then going farther on capital gains is being taxed on not what I sold it for. I'm being taxed on the gain of the sale. So I bought and again, I'm keeping it simple. I bought the table for $20. I sold the table for $30. I have a $10 capital gain. I'm paying taxes, capital gains taxes, potentially on $10.
Yep.
Not 30, 10. Capital gains can also have a downside. I can lose money on capital gains and write it off to a point. Bought the table for 20, spilled coffee all over it, it's permanently stained, so I sold it for 15. I have a capital loss now of $5. I put in a negative 5 up there. My income goes down. My overall income on my 1040 is going down $5. There's a cap on that at $3,000. But what I don't use this year carries over to next year. So it's not like I don't get it, I just don't get it this year.
And not all capital gains are business.
Yes.
You have personal capital gains
Like the house.
and your car.
Although I don't get to write off losses on my house and my car.
Right.
If I sold my car if I paid $30,000 and sold it for $15,000, well, that's just my too bad.
Bought that 1980 Fiero for 15 grand in 1980. Found a Fiero collector who really wanted it this year. Sold it for $35,000. You have a $25,000 capital gain.
To report.
Same thing, you bought the Fiero in 1980 for $15,000 and you sold it this year for $5,000. You don't get to claim a $10,000 loss.
Some other things that might show up on capital gain. I mean, the one that we've been talking about kind of almost the most as we go along here. Stocks. I sell a stock. It is a capital asset. My holding period is important. Did I hold the stock for more than a year or not? Makes the difference between being short term or long term. I want to make long term because if I do that, then I'm taxed at capital gains rates. If I'm on short term, I get taxed at ordinary income rates.
Yep.
Big difference from paying tax and potentially not paying tax at all. Boils down to one day. Investment assets include stocks, bonds, and other publicly traded assets. When you sell these assets, you would typically receive a statement for reporting purposes, usually a 1099-B. Use Schedule D and 8949 to detail the acquisition and sales dates, purchase costs, sales proceeds, and the difference between sales proceeds and the basis is your taxable gain or deductible loss, if I'm allowed to deduct it. I don't get to deduct personal things. I'm going to hold off on a lot of this because we'll come back to it.
Couple times I've done
Yeah. So, I'm going to ease you into this idea because at the end of the day, getting your head around capital transactions, if you're not used to it, it's something new. And it'll take a while to get your head around. Assets held for investment purposes fall under this category. The reporting process involves documenting the purchase and sales dates to calculate the gain or loss. I need those dates. I need to make sure that you've held it for more than 1 year. So I know how to tax it. Personal use stuff, gain of sales on personal items are considered capital gains. However, the sales that result in losses aren't deductible. I should have took better care of my stuff, basically.
Yeah.
This category includes things like home, car, personal electronics. To know if there's a gain or a loss requires an understanding of how to compute basis, and just like we said, bought the car for $20, sell it for $12. I lost $8,000. I hope I got $8,000 worth of use out of it at least. I can't write it off. Bought the car for $20, sold it for $25. I have a capital gain of $5,000. I have to pay capital gains taxes potentially on $5,000. And like Matt said, it's hard to think about actually selling a car for a profit. But it can happen. A Fiero, okay. Interesting car to choose, but okay. You gonna be out of next?
Good luck getting in and out of it.
Good luck getting out of the damn Fiero. It's not much different.
Yeah.
I know.
We have one.
There was a debate, the reason it stuck is there was a debate 3 or 4 days ago with a couple of guys I listened to on the radio. One of them owned a Fiero when he was in college in the 80s, and the producer owned a Mazda Miata when he started as an intern for those guys.
Yeah.
So,
Understanding the basis of an asset is crucial for determining gains or losses. The basis is usually the purchase price plus any improvements made. The rules for determining basis vary depending on how the asset was acquired, purchased, gifted, or inherited. Again, this is something we'll cover in more detail in a future chapter. But basis is not just necessarily what I paid for it just to get it. Basis also includes any of the money that I had to spend to make it better. Like Matt was saying, I bought a house, it was a dump. My basis is what I paid for the house. But I'm going to increase my basis by fixing it up.
modernizing it, adding to it. I'll give you an example. My wife worked for a lady. She was in her 90s. Her and her husband bought a property and had a home built on it back in 78 or something like that for $10,000 in North Newton. Their monthly house payment was $88.
Whew.
So her
Yeah, I
basis,
think like that.
her basis in her house at, if you just went off of paper, her basis in that house is $10,000. When she passed away, her family sold it for $375,000. Well, does that mean that she has a $365,000 gain? Technically, it could, but what was the house worth the month before they sold it? If the house was worth $300,000 the month before they sold it, she only has a $75,000 gain, because they started with 10, but the work that they put into it, maintaining it, upgrading it, new appliances, this and that, all counts towards the basis of the house. Because as a private owner, you can't sit there and go, well, I spent $10,000 upgrading the HVAC, I spent another $5,000 upgrading the furnace, I put brand new carpet in 4 times, I've had it repainted a dozen. You can't take that off. But you can take all of that you've put into the house and add it to what you paid for the home. So you increase your basis. Now, if you bought it for 10 grand and you didn't do a damn thing to it, and 40 years later it's worth $1,500, well, you know, you don't get to claim that loss.
Right. Fun stuff.
Yes.
And how I got it also is going to come into this. Because my basis might change. I mean, purchase is straight up. That's easy.
Yep.
If it was gifted to me or inherited, my basis might be variable. And we'll go into that later.
Yeah.
1099-B is used by the pair to report the proceeds of sales of stocks, etc. It's going to be generated from the brokerage house. Hence the B, I guess.
Edward Jones, Charles Schwab.
Yeah. And it used to be that they didn't have to keep track of this, but ever since about 2012, that's a requirement. Thank God. Because on this 1099-B, it's going to be telling me the gross sales price and the date that they sold it. Also, it's going to tell me how much they paid for it back when. Please, please, pretty please, because I need to know that number. And just because there's no number there, don't sit with that. I'm saving my story for that actual day. But I have a good one for you.
Yeah.
Because it involved some other person not knowing what they were doing. I had to come back and fix it. Because they just, okay, well, you know, hey, I don't have a purchase day or a purchase price, so I'll just report what was reported here. Reported it all as a capital gain, and she was not a happy person. Short term versus long term, like I said, makes a difference on how they're taxed. Makes the difference between whether it's a capital gains tax rate or ordinary income tax rate. Totals of short-term and long-term gains are reported on Schedule D, capital gains and losses. If my losses are more than my total gains, I'm limited to a deduction of $3,000 or $1,500 if married filing separately, and that would be going to both spouses, so $3,000 total still. Well, at least that one makes sense.
Yeah.
As long as it was a joint account. Now, if he was the only one doing stock trading, he's capped at $1,500, and she gets nothing. Because married filing separately if it was just him.
Yeah, but if all the stocks are in his name and they file a joint return, he still gets the $3,000 limit.
Yeah, he gets the $3,000. So
Even if she didn't have anything to do with
Right.
the stock. At that point, it's all about what the filing status is.
and like I said, just because I used up my $1,300 or my $3,000 because I lost 6, I get to use another $3,000 next year, and maybe add to that. I can sell more things next year at a loss. And I'm always using the oldest first. So next year I'm going to use the $3,000 that I'm carrying over, and then whatever I have left, you know, I'll add to it. I'm always retiring the oldest. 8949 is basically the details of what's going on. My 1099-B is basically feeding this. Or I can direct enter here, it doesn't matter. Especially if I don't have a 1099-B, I can direct enter here. Again, this is something more for a later date because it goes into a lot of details. But what I bought, when I bought it, what I sold it for, what I sold, or when I sold it, what I sold it for, what I paid for it when I bought it, and then, like we suggested earlier, there are these boxes here, these columns here for adjustments of maybe why I don't have to pay tax on it. It's my house primary, although it would be on short term, like this is, it'd be on long term, like this is. I'd have a code in there saying, hey, this is sell my primary house and I haven't sold one in the past 3 years. Bank time interest and dividends may be reported on a substitute 1099. Information is the same as 1099 INT, DIV, or B. And yes, we saw the substitute 1099 earlier. They had an INT and a DIV on it. But the other thing that can be on the substitute 1099 is that B. And that's basically the only way you're going to find them nowadays. Brokerage houses don't issue the individual forms. They issue a stack of papers, and you got to go digging. Yeah, Easter egg hunting. Now the DIV and the INT, yeah, that's easy to find. They're usually on page 2. The B's, they could be scattered everywhere, and you got to find them. S is report sales exchange of real estate. You receive a 1099-S when you sell your home, improved or unimproved land, or permanent structures, including any residential, commercial, or industrial buildings. All they're doing is how much. All the S is reporting basically is when you sold it, how much money you got for it, what you sold it for. It's up to your client to provide the basis. When you bought it and how much you paid for it and how much money did you throw in after it to make it better. And we're talking about making it better. The one thing that I can never count is my own labor. That has no value whatsoever.
You know,
Rules for short term and long term are still the same.
you get a lot of labor questions when you start doing small business returns.
Yes. Well, can I write off how much time I put into it? Nope.
I run my landscaping company. Can't I take $1,500 a week off for what I pay myself? No.
Not unless you're going to report it as income to yourself. I mean, you could if you're W-2 yourself.
Right. Or 1099 yourself.
But why would you 1099 yourself? You might as well.
Cheap them.
Well, here's the thing though. When it comes to that, any profit and any net profit from the company, the IRS assumes is your personal income.
Yeah.
Period.
Yeah.
So you're going to get taxed on that net profit anyway. So
If you 1099 yourself, all you're doing is rearranging the deck chairs on the Titanic.
right. So if you 1099 yourself, instead of paying the self-employment tax off of the Schedule C, you're going to pay the self-employment tax off of the second Schedule C, and I'm going to charge you an extra $200 for making me do 2 Schedule Cs.
Right. Now, if you W-2 yourself, that's a whole other. It's less work for us.
It's less work for us at that point because if you W-2 yourself, then all I have to do is put the W-2 in, and I don't have to worry about self-employment tax. But it's more work on you because now you, as your own employer, have to make sure that you've paid your company share of taxes, plus the federal withholdings, plus the state withholdings. So at that point, are you actually gaining or losing? Because out of that $50,000, you're having to pay all of these other taxes out to show that you made X dollars.
See? So there's really no reason to necessarily do that.
Yeah.
Unless you have a boatload of employees.
Yeah.
You know, if I run a landscape business and I got 10 guys, and I might want to treat them more as employees, and maybe I'm hiring my wife as the bookkeeper, W-2 her also. Go ahead and W-2 myself at that point.
Yeah.
Because I'm already doing a lot of the work. If you receive a 1099-B that reports accurate sales dates and amounts and purchase dates and costs, if there are no other adjustments or additional codes present, you are ready to complete reporting the asset sale. The 1099-B includes all necessary dates, no adjustments needed. I actually can just kind of skip and go straight. Because the IRS already has a copy of this. They already know what I'm doing. Incomplete 1099-Bs lack information. Most of the time it's going to be when it was bought and how much the person paid for it. That's what's missing. I need to fill that information in. I have to use 8949 so I can tell the IRS in detail what actually happened, because they might not know about it. In fact, there's a box on there that I'm going to be telling them that they don't know about it.
Basis not reported.
Basis not reported. That's coming down here, marking the appropriate box. A, B, C for short terms, D, E, F for long terms. Basically, here you know the basis, there I don't know the basis, and C,
Nothing's been reported.
yeah, nothing's been reported. And like I said, one's for short term, one's for long term, but they both say the same thing. A and D say the same thing. IRS knows. B and E, IRS doesn't know. C and F,
Nobody knows.
nobody knows. We're just pulling this out of our butt and hoping that it'll float.
For the longest time, C was what you had to list all of your cryptocurrency trades under.
Right. That's getting better.
Yeah.
The sums of the 8949s, and I can have, you just saw, each one of those boxes can trigger its own 8949. I can have 6 of them. They all feed one Schedule D.
You have a day trader come in with 3,000 trades in a year. You could have 3,000 8949. One for each sale.
Now, if the Schedule B has everything, I can opt out of reporting 8949 and go straight to D.
Brenda had, didn't Brenda have one that had like 400 or 500 of them? The one that we had to go.
Yeah, that was the guy that was a day trader. He
Yeah.
was on every day.
We had to go back through it because somehow it was showing a $200,000
Yes.
gain. We had to go back. We spent 2 weeks going back through that thing to find what went wrong.
Digital assets are digitally representation of value that is recorded on a cryptographically secured or distributed register or similar technology as specified by the Secretary of Treasury, I imagine? The Secretary. Federal income tax principles are applicable to property transactions that drive the tax treatment of digital assets. So right now, we're treating the sales of crypto the same as we treat the sales of stocks, including long-term and short-term aspects. When we first originally started, it was just short-term, forget it. Capital gain or loss of these digital assets is generally equal to the amount realized less the adjusted basis. The holding period determines, again, those are the same things. At first, when you got into crypto, it was your basis was 0. I wrote a program that went and mined it. I have no cost in it.
Yeah.
I have no basis.
My airman from McConnell. Remember?
Yeah.
Because we discussed whether or not to leave his income as investment income
Right.
or as business income, because he was trying to figure out whether or not it was worth it to try to do it as business income so he could claim earned income credits.
Right. Another example of getting it for free where I have no basis, what was it, 2 years ago, that there was an ad on the commercial for the Super Bowl, and you click the QR code and you got a couple of couple of crypto things.
Yeah.
You have no basis. None. Didn't cost you anything to snip the picture. Ordinary income recognition, if received as a payment for goods and services, are reported on Schedule 1. Income recognition is generally informs the basis of the digital assets received. Receipt occurs when the first has dominion and control. I can mine for it, and as soon as I get it, that's when I have dominion and control.
Yep.
That's my day one of basis. Not when I actually started mining for it. It's when I actually struck it. Common recording recognition events. When I sell it, when I use it to pay for goods and services, there was a time where I could use Bitcoin to buy a Tesla. I don't know if I can still do that or not, but I didn't have to have dollars or euros or anything else.
I
I
would
could use
assume,
Bitcoin.
so because they made notations for buying property with it,
Yeah.
paying wages with it.
Yeah. Report the capital gain or loss on the sale of cryptocurrency, or it doesn't have to be the sale. We can see that I transferred it. I transferred it to somebody else in exchange for something. About a Tesla. Well, technically, I sold my cryptocurrency. This was the value of it. 8949 reports the specific of each transaction, and this goes to Schedule D. Whether or not how long I held it, again, is important. It's changing the tax rate. So,
Hopefully, with the 1099 DA, we don't have to worry about doing things like you transfer two Bitcoins to Tesla to buy your Tesla. So on the date that you transferred those over, what was a Bitcoin worth? $50,000. Okay, well, Tesla said we'll sell you one for 2 Bitcoin. So you transferred 2 Bitcoin. That's $100,000. Your Tesla only cost $80,000. Well, you just showed a $20,000 gain. Even though Tesla got all of that money, you still owed $20,000 in capital gains, and you got a Tesla.
Yeah.
But it never got reported that way. So when that event happened, we would have to go back and look and say, okay, on this date, what was a Bitcoin worth? And then look to see if what the Bitcoin was worth that was transferred was more or less than the item that was purchased. Yeah, the IRS got real keen on that real fast when it first blew up, and people were putting in $1,000, and all of a sudden had 1,500 Bitcoin, and people are going around, 6 months later, selling out 100 Bitcoin to buy a $300,000 house. The IRS is like, hang on, wait a minute, wait, you owe money somewhere. And they're like, no, we don't, prove it.
exactly. Because it doesn't, it's not backed by anything.
Right.
Well, Bitcoin is only worth as much as what somebody says it's worth. Whereas dollars, that actually has something backing it. The United States, Yuan, China backs it. Euros, well, you have the European Union. Something else is making it have value.
It used to be gold and silver until the 80s, but
All right. So, and one other thing is Bitcoin is we use it incorrectly as a term. It is a specific unit. There are other things of cryptocurrency. Therefore, Bitcoin is a cryptocurrency, but not all cryptocurrency is Bitcoin.
yes,
There are other versions of it.
Doge, Ethereum,
So on and so forth.
yes.
All right, so a little bit different today. I have some classwork questions for you, and then we're done. So take a couple of minutes, and then we'll go over the answers. Yes, you get one. You definitely get one. I'm not worried about you guys.
This Japanese dude is killing me, man.
You're still
Every time
working
you
on
hear my
him?
phone go off,
Yes, it was.
it's him texting.
Well, at least he's giving you more information.
Not really. Yeah, but half of it she can't use it.
It's pictures.
Well, I'm not saying it's good information.
But he does cook a mean lunch. Thank
No,
you
he
for
didn't
leaving
cook
early.
He didn't cook that. He went to
I know what you mean.
Tapanaki Japanese grill.
It was good.
It was good. Should I tell them about what he's trying to pay me?
No.
I did a return for him already.
I know.
He keeps trying to tell me he's gonna bring me 25% of his refund.
Which is actually illegal.
Illegal.
He's trying to do what?
Bring me 25% of his refund
As payment.
as payment
And when we keep telling them we can't do that, it's illegal.
for my time. Because I did such a good job.
Oh, on top of what he pays for fees for the
Yes,
return?
yes.
Oh, wow.
I told him if you want to do something, you bring me lunch or pizza or. He did.
What do you want to say he's buying?
No, that's illegal.
Oh, okay.
Is it?
Tell him,
Is that the same as
tell
cash?
him, tell him
Yes.
he needs to come and cut my tree down. We appreciate that.
He might do that.
Yeah, we were gonna ask him the other day, but when he got the bowing, he touched himself.
Christ.
Japanese, give me a break.
I know, and I know it's a sign of respect, but
It makes me
it makes me extremely nervous.
Good you're not used to it. For him, it's reflex.
I know. I don't like the fact that he calls himself retarded. But that came from his mother.
Yeah, he doesn't understand.
No, his mother told him that in Japanese culture he's considered Down syndrome,
Ah,
But he's not.
but he's not.
yeah, he is not. He might be autistic.
He's
From-
ADHD for
sure. Yeah, he is that. And I think he's probably borderline autistic.
I mean, he goes 100 miles an hour though.
But
According to HHS, who isn't autistic these days?
I took a Tylenol 20 years ago. Yeah, I'm autistic.
Did you hear that woman OD? Her and her baby are
Yeah.
on life support right now? Because there's a big challenge going around to prove Trump wrong.
Oh my God.
And this woman took a shit ton of Tylenol.
Yep.
That's not
Why
what he
is baby
said.
died? What?
No, she's pregnant.
Oh.
She was pregnant, overdosed herself on Tylenol to prove to the world that Trump was wrong, that Tylenol increases the likelihood that your child could have or could develop autism. Even though all of the freaking studies showed that the percentage of increase is minute at all. And even Tylenol says, look, you know, if you're pregnant, use it the way we tell you to. If you have a fever or whatever, use the minimum dosage to get rid of your headache, to get rid of the fever.
If you have any questions, ask your doctor. Consult
Right.
your doctor. And the studies say is that the exposure to Tylenol is still more beneficial than staying sick.
Right. So,
Right,
but
because
be,
like I got my butt jumped when I went and saw my doctor the other day. Because she said, "Oh, you're taking Tylenol PM," and I said, "Yeah, 3 tablets a night." She looked at me and said, "What?" It helps me sleep.
I mean, honestly, when any NSAID, the bigger worry is the deterioration of your stomach lining with prolonged use.
Right.
But
But it's not like I'm taking it 3 or 4 times a day.
right,
It's one time at night.
you're taking the minimum daily dosage
Yeah,
once
because
a,
you, I
once a
think you
day.
can take like 8 a day. 8
Yeah,
tablets.
2,000 milligrams.
Yeah, which
But
is
back in 2005, I OD'd on Tylenol. Now, I was not trying to harm myself or
Right.
anything. I had headaches.
Right.
And I ended up taking too many in one day. And now I have liver troubles because of that one incident. If I take one Tylenol, Tylenol,
Right.
then my liver, like, ooh,
Right.
go to the hospital, they'll freak out.
I got a
Right.
question.
But I mean,
What's
But
that?
but because Trump came out and said, if you're pregnant, and you take Tylenol, your
So
baby's
she-
gonna have
so I
autism.
get these statements. She chose to hide. in
She
her
ate a
bag.
whole bottle of Tylenol to prove him wrong.
Can I write this?
She
off?
overdosed on it.
So she died.
She
then?
just damaged.
She is on life support. She's brain dead. She's being kept alive because the baby's still alive.
Yeah, the babies are gonna come out with.
Who
That's an
knows?
expense to you. You're paying it.
Yeah, so is her
See,
friend
what I'm
gonna
doing,
sue the
uh,
owner for that?
When I'm doing
Or if
They
it's, if
they
it's been announced that she did
Daryl.
it on purpose,
That-
then
that's,
she.
uh,
yeah, it's
and
been
I agree.
announced that that she did it to
I know.
prove
He gets
Trump wrong
Right.
and to prove Bobby Kennedy wrong.
I'm going
That was
home.
the whole reason she did it.
well, we'll be going
Hello?
home here in 10 minutes or so.
Yeah, I know.
So I
I'm
mean,
going home. I'm going home. I shouldn't have put jeans on.
Dummy.
And now I hate pants now. I love
I can't stand them.
Well, I'm
The only-
having a
the
lot
only
of
time-
problems with my foot.
you and I wear them. I mean, I wear it if
All
it's
right, I'll
cold
see you
outside,
tomorrow
but
night.
the only time I wear pants to the office is during season.
And me too. And I'm starting to really question that because last year I had dry patches on my legs so bad, and it's all because of the parents stopped wearing pants. The problem went away in a week and a half.
Yeah.
And I'm not wearing tight pants, and so
Well, I don't wear tie because I wear boots during
Yeah.
the winter time. My
Depends on
my
what
boots
the
are
weather
my
is.
pants are all boot cuts.
yeah, well, I find the loosest pants I can,
Yeah.
but it's not helping.
Two of my
Top
scars
materials
don't like
full of
bed.
moisture from
Oh, on your legs.
The one on the inside top part of my leg, oh, that one was awful. All four of them actually, but this up here, I can't wait to be able to feel my skin. Hate that feeling.
Yeah. So
So is that fella coming up here today, is that why?
No,
Oh, good.
no, he's just comfortable with Shannon now,
Yeah,
and that's fine.
yeah. He's funny.
No, I've met him too. He's a nice guy.
Just when
He
gets
just wants to do the right thing.
he just gets going, it's like, dude, you're gonna bump your head somewhere if you're not careful talking.
Yeah,
Are
he
you
just wants to
doing
do the right thing. He just doesn't know what the right thing is all the time.
Well, he's got, what do you say, 6 companies he's doing? 6 topics of employment?
There you go. He doesn't necessarily have that. I mean,
I think
what
he's
he
jack
calls
of
a
all
company,
trades.
the IRS in some cases would call a hobby.
yeah.
And so we have to be very careful about what we're doing.
Mhm. And the vehicles and equipment that he has.
There's a lot of explaining to do. And of course, since English is not his first language,
Right,
it gets complicated.
and he never sits down.
No, he can't. It's like the ADHD thing.
Yeah.
Can't do that.
I've seen.
Or maybe he doesn't
him
sit down. The
try
other
to-
reason is that he just considers it disrespectful.
It could be.
I don't know about Japanese custom when it comes to sitting. I mean, it's a good question. I mean, I know they have chairs so you can sit, but
But a lot of them really sit on the floor. Cushions.
and more for food.
So has
More
the
for
e-learning
dining.
for this year come up yet?
That's
Amy?
Huh?
Has the e-learning for this year come up yet?
I don't.
mean,
It's said that it's there. I haven't gone looking for it, but I did see
where?
on last Friday's thing,
Mine's open.
Liberty Post.
To talk. The
Yeah, not yeah.
2-minute drill.
Well, but no, this is the email.
Oh, okay.
That one.
It's suggested that it was that e-learning was active.
Well, how do you check?
Which one is it?
Here. Oh, I'll try.
No,
So what you do is so you go to tax
Franchise.
and then you select the topic
There.
and to tax education. In tax school, if you do what we're doing now, so this is where you go to find a book.
Right.
And we're all done with tax education. I do. And then you go in here, and then, so these are the things, and then,
should start going through all these things, and you'll get credits.
I wasn't, okay. And then that's what all you guys see. You see, somebody does.
You can go to.
I will do them.
Certified-
I mean, just
Yeah.
because, you know, I've already,
This is how.
as far as IRS is concerned, I've already met my requirements.
That's how we do it.
And all I need is officially them to issue the certificate, which they won't do for another month and a half anyway. And then I send a copy of the certificate to corporate, and then they exempt me from doing the test.
Come up here, select
I haven't done the test now in 3 years because I've proved to them that I've taken enough training that I don't need to
Oh, I
take the
get
test.
those a whole different
Then you see
thing.
tax year 2024.
Ready?
2024, you scroll down.
They're all.
Hey, if you
Yeah,
didn't finish
they're
this,
all
it's a good deal.
2024 for right now.
Yeah.
So
I'm not going to throw you under the
2025s
bus.
haven't populated yet.
Much.
'Cause that's tax
All right,
year
so let's just cover the
2024.
answers, the questions and the answers real quick here. So tax exempt interest, for example, for municipal bonds is reported on what line of 1040? I don't like questions like these because they can change, although tax exempt interest has not moved in all the years that I've done taxes, but like I said, I don't like associating activity with a line number on 1040 because they can change.
Or pay up the annual balance.
If a taxpayer's total interest or ordinary dividends exceeds $1,500, what form do I need to attach to my 1040?
For the annual balance. For Shane, he has to have 15
B.
credits
I need a Schedule B.
to be AFSP participant. I have to have 18.
Which IRS form summarizes the goals and the totals of short-term and long-term capital gains and losses for the year? D. For a married couple filing jointly, what is the maximum net capital loss deduction that they can be taking against ordinary income in a single tax year?
So these are
3,000.
gonna be the only ones we're gonna.
Now,
do. So
Let's.
mine is-
I want to clarify something about this $3,000 real quick. If I have a whole bunch of capital gains and a whole bunch of capital losses, I'm not limited to $3,000 of losses when I'm still working in my capital gains section. This is just when I'm finished with all my capital gains stuff and I lost $5,000. I'm capped at $3,000 this year. I can have a big, huge number in capital gains expenses, just as long as I have enough income to offset it. I can write off $15,000 in losses, as long as I have $15,000 in gains to write it off against. So I'm not, this limit at $3,000 is only applicable when I move out to the 1040. As long as I'm working within capital gains, I can keep on going. Gain on the sale of investment asset held longer than 1 year is classified on the tax return as a long-term capital gain. Longer than 1 year. Those semantics.
I mean, never mind.
Interest on U.S. savings bond is generally what?
You don't have to test next
C.
year for the exam.
Taxable at the federal level, but generally tax exempt from state and local taxes. There are exceptions to everything. So.
Basically, on here, if you
Interest from municipal bonds is typically exempt from federal income tax, although it may be taxable by the state.
So
Again,
basically,
There's some variables involved there.
So certifications.
Payer lacks a correct social security number for the recipient. What backup withholding rate is applied to interest and dividend payments? 24%. Qualified dividends which enjoy the same preferential rates as long-term capital gains are reported on which form of the line 1040?
So these
So
7.
you have to do these
3A.
I
two?
do not.
C.
I do not. So on for me, I
Again,
have to do this.
I hate these types of questions because they move. They can move.
I have to do this
That
one,
one and number 7 have
and
me
that is it.
kinda,
So I have to do this one,
Which form of 1099 is issued by brokers to report the gross proceeds of stock or bond sales?
So because I have that, I would
See.
do this.
Although if substitute 1099 was actually an option up there, I'd accept that answer too.
Okay.
That's the one that I paid for.
All right, so that's this
Damage
week,
covered
or
because
that's
I
this
took
class
tax
period.
investment.
We'll cover the next chapter on Wednesday.
So I did
How
10
many
years.
chapters
All right, I
is
did
there
10
total?
hours
20.
20,
of,
okay.
tax examination for tax law and whatnot.
I'll let
I
you
did the
do
6
part.
hours